everyone. Okay, so this is what we're looking at right now. This is gold. This is gold for our time frame. I wanted us to look at this from probably the beginning of the month of April to and towards the end of the month of May. Mainly, we're trying to figure out what really is going on with the market, what really is happening with the market. We're trying to do way of a monthly analysis, but mainly based on the month of May. Excuse me. See what happened in the month of May, what was going on with the month of May, what opportunities we had, what opportunities we missed, what opportunities that we didn't take, and what we took. Okay, so here's what we're going to be doing. We're going to be starting. Okay, we're going to be starting at the beginning of April. What does April begin? Right there. We're going to be starting at the beginning of April to right there. And it ends right there. Okay? And this is what we're looking at. The beginning of April, from there to right there. Okay? So, what do we have in that month? In that month, we have a hello right here. Right? There's a low of 28.38 and a high right there. All right. The high right there, 2430.70. Okay, guys. So what we're going to do is, because we're using the MT5 platform, we're going to divide the month in weeks. Okay. The month of weeks is Control Y. Here we go. This is the month in weeks we're going to be dividing. Since we have already established that we have a high and a low, what we're going to do is we're going to be pulling the Fibonacci from the low to the high, right? From the low to the high. That is from 228.38 to 2430.70. We call this the DRT levels by Ali Khan. He's a long-term student of ICT. Sorry, it's supposed to be 0 to 25, equilibrium 75 to 100, but pulling it out this way, it kind of like reverses the way it looks for the DRT levels. Okay, so now we have these, right? We have these. So we're going to be looking at where the DRT levels are and what we have there. Around the DRT levels, what do we have there? So around the DRT levels for this month, because I want to pull it until it is taken, like let me just pull it right there up until the, let me just fix it. Parameters, string is 70, right? So this is what we have, right? This is what we have. This is what we have. If you're looking at it this way, I know it's high and high, but this is what we have right now. That's the low, that's the high. These are the levels that we have right there. So what happens is we're going to be looking from this month, because like what we're doing actually is we're looking at the previous month, week of the previous month, the month of what really happened with the price. That is, we're going to be looking at this whole area right here, this whole area right there, this whole area right there. This is the main focus of our study, our case study right there, right? Let's say about this. I'll just put it right there. This is the main study of our case study. Okay, so what do we have? We have a projection line from a low to a high, right? From a low to a high, then a reversal down to an area where we see that price right there was reversed, had reversed to this level right there, right there, right, right there. Let me change the color, right there. I'll put it. I don't want anything too flashy, right there. All right, it reversed to right there. And this hit immediately at the beginning of the month of May, right? We see a price coming down here to a level of bullish order block that was left by this rally right here. It rallied up, created a swing high, rallied down as a retracement to that level right there. And we see that this level right here, this level right here, pairs nicely with the 75 DRT level, right? With the 75 year DRT level. So let's just make sure just where it hits and it's just fine right there. Right? Okay. Pairs nicely with the 75 DRT level. This is a significant thing. Why? It's an area where we see price reverse from. Right? It's reverse from. Okay. In the long-term analysis was, okay, gold is bullish. Right? Gold is bullish. That's what we have been seeing. That's what we have been doing. Right? That's what we have been trading. The bias was gold is bullish. So I'm not going to get into that right now. But what I'm trying to say is we have a price that made a high, retraced down to an area of significance, which was also on the 75 DRT level, right? Then reversed backwards by the beginning of the month, right? By the beginning of the month. So when this moved up, right? This is the beginning of the month. It moved up, right? It rallied up. Rallied up, left this area right there, just rallied up, came down, consolidated, came down to retouch it, up, consolidated a bit. Then this probably was news, still respecting this level right here, respecting this order block right there. Then rallied up, right? Now we go to this is what we are seeing for this month right there, right? This is what we're seeing for this week, for this open of the month right there, right? Okay, we leave it alone for a bit. Now we go into this week. Now this is where I want our eyes to go to. We go to this week. So the open of the week was a rally high, right? The open of the week was a rally high. It opened and rallied high, right? Opened and rallied high. To what? To the equilibrium of the DRT level, right? Then it respected the DRT level, but also with that respect, what did it do? It took out a high, right there. It took out, sorry about that. It took out a high. Let me just do this. So we don't have any problems. Sorry about that. All right. This is what it did. It took out a high, closed above it, came down. Given it was reacting to this order block right there. It was reacting to this order block right here. Right? Reacting to this order block right there. Right? Okay, this is the order block that we have. Okay? Reacted to it, came down. Respected here right there. Remember, what do we know? We know that gold is bullish, right? We know that gold is coming off a bullish order block. Why am I saying looking at only this? Because right here, all of these ranges have been closed. All of these ranges have been closed except for this one, because it has this part here, this gap right there with this order block right here, and everything has been closed. Okay, fine. Okay, fine. It has that order block right there. So what else that is it? Why is it? No, okay, I'm not looking for anything now in down here. I'm looking at this as a significant point of interest. I'm looking at it because one, this area has been closed, right? This wick right here, this wick right here has closed everything here. And right now, if you do this, because there is also this thing in with, because this is a higher time frame, right? In this area right here, in this area right there, if you pull the DRT levels from the 75 to the equilibrium, these also there are these, it shows this is part of the 75 and the equilibrium right there. This shows me that this is a significant point of interest where price can reverse from. When I see this and I see all of this right there, and I see all of this right there, I see all of this right here, it shows me that the market is willing to go high, right? The market is willing to go high. We see the market rally up, right? After just touching this order block right there, we see the market rally up, taking out this high right here, right? Taking out this high. I'll use that on first. Taking out this high right there, right? Taking out this high. Sorry about that. Taking out this high right there, right? When you took out this high, we know that there's an order block right there, right? Bearish order block. It flips the order block, right? Flips the order block. So we pull it towards, because this hasn't happened yet. We pull it towards wherever. We can just pull it all the way there. That hasn't happened yet. So we see price going up into this zone right there. That zone right here. It's fair value gap right there. With that wick of the order block right there, near the 25 level. There are so many opportunities to trade, as long as you look at it in the reaction time of the 25 DRT level, 75 DRT level, equilibrium, all those levels, they create so many opportunities to trade. So we see a reversal from that level right there, back down into this level right here, right? What is this level? This has become a breaker, right? This has become a breaker. Sorry about that. Just leave it at that. This has become a breaker. We see that the candlesticks right here are respecting this breaker right there. Do not closing. Even the wicks are not closing below the open of the breaker right there, right? Then the price rallies up. It is taking out all these levels right here, huh? Taking out all these levels right here, right? So when it rallies up, we see price going into the another week by taking out this high, the 24 30.73, right? And from taking out that high, what does that mean for us? It means, sorry about that. It means now we have a new range. We have a range from here to here. This is our new range, right? We are looking at this new range right now. What do we have in the new range? We have price coming down right there, right? Comes down, comes up, taking out this level, right? When you took out this level, it changes. What do you see? Market structure shift. Market structure shift. We see that it makes this order block right there, right? I like using the bodies, guys. I like using the bodies. I'll just do this for you guys. You see this right here makes a change in market structure. What do we have that we need? We have a price that is taken at the high, 22 ICT mentorship stock model, taking out the high, reverse, leaving an order block, going to the downside, right? Coming back to that order block, mitigating the order block, then rallying down to the downside. Then the following week, we just see consolidation preparing for this move right there, but we'll talk about it another week. But what do we see? We're seeing that there are levels in price at higher time frames where it is easier to trade because the market is creating opportunities. It is creating highs, creating lows, creating highs, creating lows, creating highs, creating lows, and creating POI uh, 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 POI levels where it reverses, it goes up, comes down, reverses into the level. Retraces into the level, then reversal and the rally. It does that at all these levels. I'm sharing with you this. I'm Please don't mind the way I'm talking. Um, in all this mumbling, there's great opportunities and a bit of wisdom there. It is something that I've learned. I've been learning for the past month, right? I've been learning for the past month the DRG levels. It is something that I'm studying, and I just wanted to share with you what I have. This is something that I've been learning for the past month. I just want to share with you what I have and how it is moving, how it is doing these things, how it is reacting at this level, so that maybe you can probably be the one who explains better to the next guy who might need it, or you might see this as something that is easier to understand when I explain it. I don't know. But what I'm saying is price ranges for higher time frames is much easier to see than lower time frames. How? Because price moves in from a swing to another swing, from a swing to another swing. In between those swings, there are levels, the DRT levels. Those levels is where price always reacts. If you look at it here, just looking at it here, this is the one. I'll just say 1 or 0. This is the 75. Look at the price reactions right there. Look, equilibrium. Look at the past reaction right there. Look, look at the past reactions right there. Price reacts at these levels, and if you can master that, you will be able to make more money and make a living out of it. This is my one of my first videos to share. I hope this gives somebody an insight on what to do and how to do it. Thank you.